The dollar is bullish. The fundamentals says price should go up, but the Bank of Japan has stepped in at this exact level 6 times. That means if price pushes into the 160 level price mark, you're stepping directly in front of a central bank. So I think it's time we do a full breakdown of this entire analysis again, just for you to understand exactly where the chart is and what BOJ is doing.
So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang.
So we're starting all the way from the yearly candle, just like we've done with the British pound and the euro against the US dollar. This time is the Japanese yen against the dollar. First thing you observe here is, well, it used to be actually way higher than this before. This was back in 1971. This was so far back, none of us here must have been born, except the real elders. But I digress. Let's get back to business. Looking into these candles, these are all yearly candles, meaning each candle you see here represents 1 year. Whatever you see here is extra amplified. Now, what do I mean by that? If you see a pin bar here, it is amplified, extremely amplified, because the small move that price is going to make in the future is a huge move on the lower time frame. Now, let's take a good look at what we're saying here. In recent times, price created, this was back in 2016, the entire year left behind a yearly rejection right here. And you can see how price kept digging into it for years and didn't even go through it completely. It just kept digging into it for a while. And then finally, it skyrocketed. It went boom to the upside. Same thing as when you have a demand or a supply zone around here. So for example, you see all this decline that we just concluded about. Do you look back here and see that this is a yearly supply zone? I mean, it's a combination of one whole year called order block, according to ICT and the rest of them. But it's a supply zone on the yearly, and you can see what it led to. It led to 1, 2, 3, 4, 5, 6 years of downtrend, 6 whole years of downtrend, just because a supply zone that wasn't even going to stand appeared. This is for you to understand what I say when I say any candle move I see on the yearly is absolutely crucial. Now, let's head back into the real deal. The real deal is this. We had a rejection from the upside once, we had it twice, and then price finally went above it and closed well above. On closing above, what happened the next year, 2025? Price came down, went back up aggressively, almost instantaneously in the same year. That makes this entire area a slight, as usual, a rejection area. Now, price in the year 2026 has come into this rejection area and is pushing out of it again. But one thing you need to take note of, is this is not the first time we have been here. It is not the second time we have been here. It is not the third time we have been here. This is the 4th time. This is time number 1. This is time number 2. This is time number 3. Now, currently, we're in time number 4 around this same level. So price has been here multiple times in the past. Now, I want you to pay attention to this very well. Pay attention to this. I'm going to put a very small indicator right here. A very small indicator right here. Something that isn't like big deal. And I want you to just pay attention to how this small thing applies over a long period of time. In the first year, last year, we had a major rejection from the downside, meaning a lot of deals came through and there was way more strength in the US than in the Japanese yen. Moving on to the monthly. Again, this is another huge time frame. So it's a time frame that you should still be careful around. Now, when price did all those rejection, blah, 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 whatever, what has been happening since the beginning of the year? This is all the way from January this year. We've seen price reject the downside a lot. Price consistently rejecting the downside and trying to push up towards the upside even harder. But even on the monthly, this is what you should observe. Way back in 1989, when price came into this level of, like this price level, right? When price came into when the market moved into this price level, it was immediately rejected, and price has stayed lower than that ever since 1989. What happened? Price came back to this place after years, and it's 2024. And in the year 2024, what happened? Well, in April 2024, the first time price came back into this level, price did what? Price immediately started showing signs of weakness. Price came down, got rejected from the downside, went in so hard, and then suddenly capitulated 4 months later. So that is 1, 2, 3, 4 times within this zone. Price capitulated hard, came back the next year, came back in December of that year, all the way to 2025, and fell again. That is twice it has fallen from that level in less than 2 years, and once decades ago. And now price came back here again in January 2026. And what happened? Price fell down hard. Once more, price fell down very hard. Price went up, and price has been mitigating the zone very, very hard recently. This is the monthly understanding of the market. And in the monthly, we are not looking for supply zones, demand zones, resistance zones. No, we're looking for clear previous candles prediction. Previous 4-5 candles is more than enough to tell you what you should be looking out for in this coming time. We're not trading position tradings, right? We're not placing position trades. So therefore, whatever a candle did, the last 2 sets or 3 sets of candle did, the average of that thing is what it's most likely is going to do now. And if you look at the last 5 candles, not the active candles, you count 5 candles back. 1, 2, 3, 4, 5. You have 3 bullish candle, 1 bearish candle, 2 bearish candle. However, if you look at the exact pattern of those 5 candles, very, very well. When I say 5 candles, I mean all the way from December 2025. If you take a very good look at those 5 candles, you would notice one thing is peculiar about it. There has been major rejections from the downside, and there have also been major rejections from the upside, making this a consolidatory move. It is literally consolidatory. I don't know how anyone else is seeing it, but market has gone into that extreme consolidatory phase in a location where price has constantly been rejected from. And one thing happens after consolidation is expansion. The problem is expansion to which side? Is it going to expand to the upside, or is it going to expand to the downside? This is where the problem really lies. Now, most people will say you can tell where it's going to expand to by reading into the lower time frames and all that stuff. Yes, you can at least try to predict, but you can never be 100% right? Because this is it. Market is all about prediction of the most probable direction price is going to move. That is basically what market is all about. And if you pay attention to this zone very well, what has happened is that price came into this zone, got rejected multiple times, and each time it got rejected, it created a strong supply zone. This was the first time. This is the second time. And price created what? As usual, immediate rejection. But now price is struggling to create a rejection from this zone. Doesn't necessarily mean that price is going to run out of it. Doesn't mean price is going to suddenly wake up tomorrow and finally create that rejection. And even if it does create that rejection, there is already a monthly demand zone waiting for it. So what are we saying here? Price is currently within a monthly supply area. And there's a tendency that if it starts to push to the downside, this is going to be the monthly low where it will most likely go to. That is what we can see from this whole perspective right now. Moving on to the weekly. On the weekly time frame, what do we see? With the same notion, the same knowledge, price has rejected from this zone multiple times. Price is now doing a very similar thing. What did price do last? What did price do last? Well, the last thing price did was to create a supply zone above this area. And you can see it has created that supply zone on the weekly. What does this mean? there is higher tendency for supply to hold if it doesn't create a demand zone. However, this is where the trick is, and this is why I personally don't trade the US dollar against the Japanese yen right now. This was the reason why you would call it a supply zone. Why? Because the third candle did not mitigate with the first candle's low, sorry. What makes it a demand zone? This first candle's high does not mitigate with the third candle's low. And what do we see right here? Well, exactly the same miracle. It did not mitigate with the candle's low. So therefore, what do we have? We have for ourselves a weekly demand zone. Now we are literally sandwiched. As far as I'm concerned, this is a market where all risk is sitting on the table. Every single risk is sitting on the table. And it's a market where if you're trading in it, personally, I would say take out your trades for now. Let the market decide its proper direction first, then we'll come back into it. But if I end this video at this point, I'm kind of like a hypocrite. So let's go deeper and see if there's something that could be there that we are not touching yet. This is where we head into the daily analysis. And for the daily analysis, there's just one thing we do, right? There's always one thing we do. We call out the fundamental stance of the markets. This is the US dollar against the Japanese yen specifically, right? Only. And what we see here is a very, very green situation. I mean, the sentiment is bullish, not slightly bullish as usual. It's actually bullish. How is it bullish? Well, it's bullish because the sum product is over 77% with a very mild variance of 3.06. How did this come about? First and foremost, yield is 83%, meaning there is much more positive yield in this market, buying into this market, right? The high impact overall is above 50%, though it's within the slightly bullish neutral zone. It is still in the good side. The recent 14 days data that has been coming out says that the US dollar has way more good news than the Japanese yen. The daily direction is currently bullish because price is way above the 20 moving SMA, right? And the non-commercial traders, well, they are more into buying the dollar than they are into buying the yen. While for the retail traders, they are kind of like in the same direction, but my signal is then telling me it's quite neutral. So I should be in the neutral side when it comes to playing against retail traders. And then the charts. It's quite confusing for one reason. The 160 mark is where the BOJ intervenes. And not once, not twice, not 3 times. They've intervened in this zone 4 times already. And they are looking to do it again. This is it. I would label it for you to know. Maybe I'm saying it and it's sounding like I'm just playing here. So let's label it properly so you guys see it for what it is, right? This is the first time. This is not the first time. This is actually the second time. The first one was in 1888. 1889. What the hell am I saying? So this is the first time it happened, right? This, my dear friends, is the second time it happened, right? The second time it happened within this same zone. This is the third time it happened in the same zone. This is the third time it happened. This is the fourth time it happened. And the last one that happened recently, right? The last one that happened recently is the fifth time it is happening, that this zone has been constantly pushed down by the BOJ's intervention. 5 times in a row in 2 years. It only says one thing. This is an area where extreme caution is required. I don't know how else to say this. Somebody messaged me telling me about how the US dollar JPY is fundamentally bullish. You should go into this trade. It's a very, very good bullish trade for now. Seeing real good, all moving to the upside. It is extremely risky, even as a day trader or a swing trader or a scalper. It is at a risk level of maximum capacity. Because right now, we just analyze the daily, we just analyze the fundamental analysis. It says go long. But go long where exactly the BOJ has intervened multiple times. You can see I drew this channel from the yearly. I didn't draw it from anywhere else. All the way from yearly. From years. Sorry. Yeah, from the yearly. From the yearly time frame is where I got this analysis from. And we're looking at the daily time frame, and we're constantly seeing that that zone has constantly, year after year, shown reasons to avoid this level when price is playing within the zone. It is more of a resistance zone than it is a support zone. Way more. In fact, it has never once become or shown credibility for a support zone. It has constantly, repeatedly shown everything as a resistance zone. Matter of fact, I counted 5. I counted wrong. It's 6. I just saw it now. This is number 5 right here. This is number 5 right here. This is number 6. So 6 times actually, in reality, 6 times price has come to this zone, and each time it came here, capitulated to the downside. Each time it came in, capitulates to the downside. And what are we seeing happening right here? Well, just to stop the hypocritical movement, I don't want people to say, you're just being pessimistic about this market. Because it has happened so many times doesn't mean it's going to constantly happen over and over again. So let's just go in a little bit deeper. Even though, don't forget that the fundamental aspect says, fundamental sentiments actually says go long, right? Go long. We are within a weekly supply zone. And within that weekly supply zone, this is a daily supply zone sitting right here. A very, very clear daily supply zone right within this area. You can see how the red is becoming reddish, much more reddish. And then we also have, where do we have demand zones? We have demand zone here, a clear demand zone right here. This is a daily demand zone coming from a very good origin level. But we also have a second one, right? The second one, which is right here. This one, I won't call a very clear daily demand zone. I'll call it a weak zone. Why? Because it's not like the bottom part of the market. It's just more like escaping the fights to the upside of the market. One thing is happening on this chart just by looking at it on the daily time frame, right? You can see price is beginning to go below daily low. You can see this is a daily low right here. Just to make it far more clear, this is a daily low right here, and price is going through it. Price is going through another daily low. Price is currently aiming for this obvious daily low. Now, just by looking at this market, these sets of candles here, this small sets of candles at the top here, this 5 candles here, like I told you, 5 candles is just enough for you to have like understanding of what's happening to an extent on the lower time frame. What has been happening here is price has constantly moved to the upside. Then price moved to the downside, closed here, moved to the upside. You can see what is happening here. This is an obvious level for lower time frame. Without going into the lower time frame, it is quite clear. If price should take out this level, my dear friends, we're in a technical downtrend. Regardless of if the fundamental tells you 100%, you are in a technical downtrend. And you're in a technical downtrend for one major reason. The BOJ is looking at this market. The second other major reason we can be in a downtrend here is if the US dollar doesn't print good news. So this is more like you're trying to just jump into risk for free. That's what it looks like. Again, let's take a look at what's happening. We're going to go down to the 4 hours. On the 4 hours, what do we see? The market looks like it's going to the upside, right? It looks like it's going to the upside. However, do you notice how difficult it is for price to move recently? Again, like I said, the US dollar is on holiday. This is how difficult it is for price to move in here. Extremely difficult, right? If it is this difficult for price to move in here, and price is already creating extreme rejection zones over here, as you can see, it's beginning to show you more weak at the top than it does at the bottom. Yes, there's a rejection down here too, anybody can say that, but price has already dug into this rejection. It is no longer a valid rejection compared to the one at the top, which price has also dug into, But take a good look at what we're seeing here, my dear friends. This zone is showing you every reason to avoid, while this zone is showing us tendency of being eroded. So again, maybe I'm beating a dead bed here or beating a dead horse, right? But this market right now is a market that even though my fundamental analysis is all green, this is the level where the BOJ has constantly come back. Let's read this news. You can just pause the video and read what is written here. You understand exactly what I'm saying. I hope I've shown you a reason why the US dollar Japanese yen is an avoid market right now. Quietly an avoid market. No matter how good the data is saying, or no matter how beautiful the technical chart is looking, they are not correlating right now. They are not looking friendly with each other. It's looking opposite. Added with the fact that geopolitics, this is not geo-economic news. No, this is geopolitical news. Geopolitics is looking to tilt anything in any direction. You should be careful. I hope you learned something new from this video. If you did, do well to hit the subscribe button, the like button, and share this video with someone who you think may find this trading knowledge valuable to their trading journey. See you all in the next one. Do well to drop a comment for the charts you want me to analyze next. Without further ado, I'll tell you, I don't like to waste your time. See you guys in the next one. Peace.